Good morning, traders and investors. Todd Gordon here. It's Wednesday, December 16th, and I hope you guys are doing well. Thanks for joining us here Wednesday morning. This is TA Live, Wednesday live stream. I think that's the name we're going to settle on. Let's see. So the end of the year, we got I guess, a pretty big snowstorm coming up, nor'easter. Looks like it's going to settle in over New York City and in Pennsylvania. Friend of the show, JC Peretz, just moved to the east. Good luck, buddy, with that snowstorm. Maybe a little thin up here, unfortunately, in the ski resorts, upstate New York, but that's all good. Good market we have going here. Looks like futures are up again here today. Looks like they've given back some of their gains from earlier pre-market session. News of the vaccine starting to be transported, and the vaccine has been publicly given to some healthcare workers, and it's being transported, I believe, from St. Louis to Massachusetts. And actually, the trucks are going to go right through Albany, which is about the capital of New York, which is about 45 minutes south of here. There's also news that Moderna is going to be authorized by the FDA. So this is the second vaccine, and a lot of the reopening stocks are getting a pretty good bid here. But what else is working is what has worked. So very good rally. It's been a crazy, unbelievable year. Hopefully 2021 has a little less drama in store for us. So hope you guys made it through this year okay. I'll talk a little bit about the market, kind of just recap what I've been doing with trading and what we're going to do in the future. There's been we've had some requests and some complaints on the message, on the comments below, and the YouTube windows that we don't give Alex enough time. I know we love Alex. Everyone loves Alex, especially with covering the crypto. And now we're starting to get a pretty good move lower in the dollar. And it seems to be that the constant complaint was we weren't giving enough time. So we answered the call. We noticed the demand. So we're going to fix the supply side of the equation. And as you guys hopefully caught, Alex has his own show. It was just a disservice to only give him, each guy's got 9-10 minutes to talk about what he's focused on. So Alex's crypto show his debut was last Thursday at 9 a.m. It's going to go again tomorrow at 9 a.m. So we're going to focus this on the stock market side and give Alex, his own venue. So, Bitcoin continues to hang around 20,000. It's below 20,000. It's going to have a position and it has a position in my portfolio. And for the money management business that I'm launching in 2021, there will be some allocation towards that. So I've been hard at work on that. I really haven't been focused day by day on what's going on in the market to sort of regurgitate all the trends and developments that have happened in the market. So I'm just going to kind of talk longer term, quickly, bring in the TA team here in a second, and then get you the information that you want to know. So as you guys have heard many times, I've just been head down focused on launching my own wealth management business, which has been my dream for a long time. I've always wanted to be more than just a trader, more than just a research business. And trading analysis has been my baby for the last 10 years, and I've developed an amazing team who's now running day-to-day operations. And just kind of thinking back to what's worked last year and how to position the money management business to hopefully work next year. We've seen a lot of technology, obviously, in the stay-at-home, work-at-home environment work really, really well. And as I'm prepping for the money management business, I'm seeing a lot of sectors and a lot of industry groups and stocks that people are talking about that are working. And a lot of it's the coming back online, reopening stocks. Airlines are coming back, and some travel stocks and some hotel stocks. But there's also, I think COVID has permanently changed the way we're going to exist, both on a professional and a personal level. I did CNBC yesterday, and we talked about Match.com on I think that was on Trading Nation, and that's that stock has been ripping. It's been a really good performer. Even the way that single people are meeting other single people, I think that's permanently going to be changed. But the point is, I think next year and the years to follow is going to go back to being multiple sectors, multiple industry groups. You got to have exposure, not just in technology and communications and discretionary. You got to have exposure across. So I'll show you a couple stocks that I'm looking at as I'm prepping, as I'm building these portfolios for the money management company, which is going to be Inside Edge. Inside Edge Capital Management, kind of a play on my ski racing career. So Terry was helping me go through some numbers. I'm sort of getting some track records ready, how I did last year, to put them in front of you in a legal way, and a compliant way, and hopefully a tasteful way. It's, Terry and I were going back and forth on this, and, one of the 3 accounts that I trade is my 401k. I have an individual 401k, and Ben, if you throw the screen up there for me, if you don't mind. This is my individual 401k. I don't have a retirement plan here at Trading Analysis yet. Maybe that's going to be on a 2021 docket, but I contribute to this individual 401k. And, this is the portfolio that I'm looking at. And just to show you guys, look, you guys love Trading Analysis because we trade real money, right? We own the trades. We put real capital to work. There's so many out there that just put research up and don't put any money out there. And I don't know. I just never understood that. I never was going to run Trading Analysis that way. So, this is kind of fun. And, so just to show you kind of, if you're in the right stocks, you can identify the right trends. And sometimes you have to hear what the fundamental argument is, but also set it aside, because if we listen to the fundamentals, that valuations are too extreme, could have missed out on a really, really good year. So, so this is my 401k. This is my actual account statement. And before I go through this, guys, there's a little bit of luck in this. It's not like I'm claiming perfect victory, and I skillfully navigated the year, but started with 57,000 in this 401k, right? And then this is January of 2020. Here's July. I did contribute 49,000 to it. So from 53, we went up to 144. And then where we stand today with 2 weeks to go, I'm at 180 in the account, right? So overall year-to-date P&L was 73,000 in this account. And, listen, there's a few things that are happening here. This is the actual calculated return. Let me just pull this over. So time-weighted return on the year for this 401k was 77,000. All right. And then the compounded annual growth rate was 82%. Now, that's just the point that, look, I made some contributions in the end of January. Actually, it was February 4th. I put money in, and again in June, and put the money to work. So yes, I added at the right time. But guys, I guess the point is, if you're anywhere, within outside of 5 to 7 years of retirement, I just always want to make the point that I run a trading business. This trading business does really well, but I don't want you guys not being involved in this market. I think, there's too many, doomsdayers. There's too many, the sky is falling, perma bears out there, unfortunately, that, eventually they may, and they probably will be right. But that doesn't mean that you can't just simply look at a chart and look at the trend and say, this market's going up. This market is starting to discount something that we don't quite understand. The balance sheet and the income statement doesn't quite detect what's going on. And, markets are always forward-looking and discounting what's going to be in the future. And you don't really know what the market is sniffing out. So be involved. Trade with a small percent of your money. Trade with 10, 15, 20% of your capital with us at Trading Analysis. But make sure you're properly invested, because if you missed this run, guys, I just, with 2 weeks to go, I'm up 80% my 401k. That's gonna help me a lot. I'm going to be 42 here. I need this in 20, 25 years. That's going to help me a lot, right? Just by being invested. So, that's that. Yes, it's a lot of tech stocks. You can see, what's here. You got Roku, you got Twilio, you got Match, Apple, AMD, Peloton, right? And if you just look at this, here's the actual profits. I just sort by, stocks. I've made 10 grand in Roku, Twilio, Tesla, Match, made some money in TLT on the bond trade, Apple, Nvidia, Lulu, Peloton. Obviously a very heavily weighted tech portfolio, which is not going to be appropriate for everybody. But if you're 30, 40, 50, and you're still working and you don't have money and tech exposure in the market, like you've missed it. Will it keep going? Possibly, probably. But, just to make sure, and then here's my losers. This is a hedge I put on a NASDAQ. I lost $2,300 in this. I lost money in Ruger, AVAV, NVRO. I actually lost money in Home Depot. How do you do that? So the point is, guys, tech worked last year. Is it going to work next year? Maybe. But I'll tell you, I'll show you quickly what I'm doing here, building out watch lists and portfolios in the different sectors for the money management. And I'm showing this very quickly. I'll give you a snapshot. I'm going through every stock in every industry group in every sector. And what's interesting is, there's some pretty good stocks out there that I think we're going to be trading next year that people aren't talking about. So let me just spin you through some of the industrials that I'm picking out there, both for the dividend portfolio and the growth. Okay, so let me just throw a couple names out there in the industrials. FedEx, no surprise, an amazing rip back. UPS, no surprise there. But how about this one? We've talked about this on the show. How about Generac? How about, as the snowstorm is about to rip New England and the mid-Atlantic states, how about the generators? I mean, that stock absolutely ripping. How about this one? SHYF, Shift, a trucking company, Shift Corporation breaking out to new highs. How about this one? John Deere, no surprise there. How about Trex? How about replacing your wood deck and putting composite board down? Look at this stock ripping. How about a defense stock that used to be Taser? Unfortunately, that was benefiting from the unrest. Axon Enterprise, AAXN. How about AMRC? Heavy construction. There's some stocks that are absolutely ripping. Okay. And then in the on the dividend side, how about Cummins Engine, CMI, solid stock in the upside. How about WMS, buildings and materials, ripping on the upside. There's a lot of stocks that people are just not talking about that are moving out there. So I'm thinking next year, maybe, beyond just the main tech FANG, stay at home, work at home stocks, I think there's going to be other opportunities out there. How about this one? I came up with this one last night. This thing is unbelievable. Beam, specialty finance. Stock is just ripping from 10 to 38 in the last 6 months. So there's stocks out there. And, if you want to get a return and sort of generate those excessive returns, it's where you got to be focused. So I'm taking way too much time here. Let's bring in the team. Terry, Bennett, good morning, guys. Sorry for going over.
Good morning, Todd. How are you doing?
I'm good. I'm good. How's it going, boys?
Oh, doing great. Holiday season. I always love December.
You guys,
yeah,
I know.
Christmas right around the corner.
What do you guys do? Do you kind of like at the end of the year? Like, what's your thought process? Do you guys kind of think like, do you reflect on the year? Like, what's the process that you guys go through?
Well, I think 2020 is a little different than previous years, so I think it's yet to be determined.
No, but I mean, what do you take away? And sorry to put you on the spot, but what do you take away from this? What do you do this year, and what are we going to do different? I mean, we all work from home, so Terry's retired and got the retirement job of a dream retirement job.
I mean, I've obviously entered the second phase of my life here with a retirement career and in a hobby that I enjoy doing and is working for you, Todd. So, you have to stay active. If you're going to retire, you can't just sit around and watch Oprah Winfrey. I don't even know if she's on TV anymore. But you can't just sit around and watch Oprah, right? So you got to have a hobby. And this is one of the things that I've always toyed with it and played with it, throughout my career. But my job at ExxonMobil took a lot of my time, so I couldn't devote as much as I want. Now I'm free to devote a lot more time and energy, and I really enjoy the technology that we have today. Motive Wave, instant access to the data, the plotting, the charting. I mean, that's right down my alley. And now we're working with this Optima tool that's giving us this edge that, Todd, I know you're enjoying looking into it, just like you got through demonstrating these various stocks that nobody's talking about. If you just sit around, it's real easy. Just sit around and listen to the people talking on the air. They don't mention, they're talking about the John Deeres and the Apples and there's just, the common stuff that everybody thinks that those are the only stocks that are moving. But there's a lot of hidden gems in here, and I think this is a good tool we've got that's helping us dig those out. So, yeah. But as far as one more thing, I don't think I reflect at the end of the year. I think I wait till January, and then I look back and say, what am I going to do this year different? So I haven't gotten to that point yet. So.
Okay. Oh, that's fair. I just threw that at you guys, throw you on the spot. But yeah, so all's well. TA, great year. You guys have done a great job. Company is doing well. Bennett's heading up the analysis. Terry is doing a lot of the sector rotation work, and Bennett's coming up with some great trades. And so let's transition over to Bennett here. We're going to do the hard red edge here. Bennett Tyndall going to catch you up on the indexes, important sectors from the technical point of view. Be right back.
Good morning once again, traders. Thank you guys all for tuning in. So let's jump right into it, going full screen on the Motive Wave platform. And what I want to start out with is actually the wave count that we're tracking in the US dollar. And if you'll recall, going back to March, kind of at the bottom of the COVID lows in US equities, we were tracking a zone of resistance in the dollar. In fact, we had confluence between 2 degrees of trend here, which were indicating that we were going to see a trend reversal in the dollar and begin a motive impulsive 5-wave decline. The initial decline took us into the March 27th low here. We had a counter trend wave 2 correction. At that point, we were forecasting a wave 3 into the 1618. Wave 3 completes into the 1618. You have a nice 3-wave counter trend rally in wave number 4. And what I find so fascinating about this current chart, compared to, for instance, the S&P and some of the sectors we're going to talk about, is you'll notice here that we're tracking the final subdivision within a 5th wave position. This 5th wave position is the 5th wave that originates off of the March high in the dollar. And you'll notice inside of blue wave 5, you have a 5-wave subdivision. And inside of the 3rd wave, you have a nice discernible 5-wave trend as well. This is indicating an additional low in the dollar, which will then complete a 3rd wave position, an additional counter trend rally in wave 4 to square up to this wave 2 back here. Then we see a push into new lows in the dollar. And at that point, even if our longer term bearish interpretation of the dollar is accurate, we should at the very least be in store for some sort of a counter trend 3-wave rally. That's when I do think we're going to see a larger correction in the US markets, but I do think that's going to be a buyable pullback. So let's take a look at that. Let's now switch up from the dollar. I want to quickly take a look at gold before we transition into the S&P and the sectors we're going to talk about. Looking at gold, it has caught some traction here in the past few sessions, and we're tracking 2 interpretations of gold at this point on the weekly time frame. So I'm going to give you the kind of the 30,000-foot view, and then we're going to focus in on what I'm watching to help determine which of these 2 interpretations are actually at play. So the interpretation that you see here, starting back in December of 15, you have primary degree 1-2, intermediate 1-2, and then this shows the completion of intermediate wave 3 and an intermediate wave 4 pullback, wave 4 pullback. Alternatively, we're seeing the the orange primary degree wave 3 completion, which still gives us a 5-wave subdivision of orange wave 3, and this would indicate an additional move to the downside in gold. So let's get back to the interpretation which suggests the 4th wave is over, off the weekly down to the daily. You'll notice that coming off of the August highs in gold, we had a 3-wave move, which at that point could actually square up to a smaller correction, but the move that followed was not at all impulsive. It was very corrective in nature. So we didn't get bullish on gold back here. We said, let's be patient. Let's wait for this subdivision to complete. You complete an X wave, and then you can count a 3-wave subdivision in green wave Y. Inside of green wave Y, you have equality of the corrective waves, so C as compared to wave A, and then you also have that representing equality of the higher degree wave 4 as compared to wave 2. So said otherwise, back on the weekly, if this is in fact all of wave 4 of the intermediate degree, it was exactly equal to the magnitude that we saw in wave 2 in terms of net percent correction. So what am I watching to determine if in fact we are going to trend impulsively? Back down to the daily chart, you'll notice that this initial move up can be counted as either 1 or A, as we can get a 5-wave subdivision. And what we're looking for now is, at the very least, some sort of move back to the 61.8% retracement. So if we see a 3-wave subdivision occupy this X wave and start to roll over to the downside, that's when we will be looking for an additional low in Y of the higher degree 4th wave. But if we move into this zone of resistance between 1887 and 1921, and we just continue higher through this 78.6% retracement, that's when I think the possibility that this interpretation is in play. So keep that on watch. We'll continue to track that and update you guys as things develop. Now over to the S&P, let's talk really quickly about the daily chart here. Last week we had a guest on, so I didn't have as much time to take you down into the smaller time frame charts. And we mentioned that we did feel a break through this expanding volatility pattern on the weekly was in development. But as you know, inside of impulsive trends, they don't just move up in a straight line. And the second half of last week, we did see a rather sharp market correction. But what's really fascinating about the correction that we saw last week is it was very much so expected based on the Elliott wave counts that we're tracking in our leading sectors and indexes. So let's take a look at the leading sectors and indexes before we bring that interpretation kind of back to full circle in the S&P. So looking at the NDX, the NASDAQ 100, you'll notice that we had, going down here on the, let's start on the daily chart just to give you some context as to what we're watching and looking at. So we're going to focus in on all of this price action since the September 2nd high. I'll leave the white circle up there so you can see where price action takes you. Here's that white circle that we were just focusing in on the daily. We're now down on a 1-hour time frame. So going into the November 9th high, so out of this blue wave 4 correction, we have a nice 5-wave rally into the November 9th high when we had the news out of Pfizer. We then get a very swift 50 to 61.8% correction in that wave 2 position. From there, you print 5 waves to the upside, and we enter a complex sideways wave 2 correction. This wave 2 corrective pullback took you to about a 50% retracement, and at that point, we then start to trend higher, and you can count 5 smaller waves in orange wave 3. Orange wave 3 was just shy of 161.8% of the magnitude of wave 1, which is a very common third wave stopping position. What's really fascinating about this corrective pullback that we saw into the end of last week is, based on the guideline of alternation, Elliott wave was suggesting a directional and sharp corrective pullback. Let me explain why. The wave 2 position that we're squaring this pullback up against was actually sideways, which is a little bit unusual in a wave 2 position. Typically you see these roles reversed in that wave 2 is directional and wave 4 is more sideways in nature. So you have the sideways wave 2, wave 3 into a 1618. That indicated a directional wave 4 pullback, which we did get. In fact, if you follow me on Twitter, I had put out a chart suggesting 12,318 reversal in the NDX, and we've since rallied about 3% from there. So that's the NDX. Notice this is suggesting that we get, back over here on the daily chart, we get one additional high in 5 of 3. We get a counter trend wave 4 pullback. We get a new high in wave 5. That then gives us the required completed subdivisions to suggest that a 5-wave move off the March low has run its course and a larger wave 2 pullback is in store. I do expect that larger correction to take place sometime early next year, but I do feel that that's going to be a buyable pullback, and it's going to be a fantastic opportunity to get on board this market for those that were either underallocated or just completely missed the rally off of the March lows. So that's the NDX. I now want to quickly take a look at the XLC and the XLK. So the XLC, the communications sector ETF, which was kind of a spin-off back in June of 2018. You'll notice that here on the daily chart, we came out of a wave 4 triangle completion and started to move higher off the daily chart. We're going to use the same circle exercise just to give you some context as to what we're looking at. And we're now down on the 195-day half-day chart, 195-minute half-day chart. Again, 5 waves into November 9th, wave 2 pullback, 1, 2, up in wave 3 to a 1618. This actually gives us one additional subdivision. And you'll notice this was also not only 161.8% of the magnitude of wave 1, but it was also 161.8% time extension of wave number 1, which is a very interesting zone to be watching. So that's the XLC. Over to the XLK. Tech obviously has been leading a good part of this move off the March low. Coming off of the 4th wave pullback, 5 waves into November 9th, sharp wave 2, 5 waves up in wave 1, another sideways wave 2, just like we saw in the NDX. 5 smaller waves into green wave 3. Look where green wave 3 came to completion, right into 161.8% compared to wave 1. Sharp wave 4 pullback. Wave 4 did demonstrate equality to wave number 2, and now we're starting to move higher. Again, this chart also suggests a new high. Counter trend wave 4, new high, then the subdivision is complete, and we could be setting up for a larger correction. But I do think that that's going to be a fantastic correction to take advantage of, so it's something you should be thinking about in advance. So that's the XLC and the XLK. Let's take a look at the SMH semiconductors. Really fascinating to see all of this line up. Coming out of wave 4 back on October 30th. Let's get off the daily chart. I'll drop the white circle on here so you can see what we're watching. Down on the 1-hour time frame, what do we do in this chart? We have 5 waves up into November 9th, wave 2 pullback, smaller degree 1, 2, up in wave number 3. Where did wave 3 stop? 161.8% of wave number 1. Really rather remarkable. Also, sideways wave 2, directional wave 4. Absolutely love it. In fact, knowing that this correction was in store, we actually took advantage of it and deployed some capital, took a position, took a trade into that wave 4 pullback. The last chart that I want to wrap up with, I've taken way too much time, is that of Apple. I'm not sure why it's not on this watch list, but we'll drop down to our focus list. And you guys know we've been watching for this post-triangle breakout in Apple. And taking you guys off the daily, we'll drop the white circle on and look at the 1-hour chart. Let's go down to a 1-hour to start. We were looking for a move through the B wave highs at around 125. We've since printed 5 waves up. That did give us a 3-wave corrective pullback. Apple was up about 5% yesterday. Really rather remarkable move. The orange wave 2 correction here is a little bit unusual in that you have a truncated C wave, but we're now approaching 5 waves up into resistance. I'm going to be looking to the wave 2 corrective pullback to take advantage of this breakout that I do think is going to take us through 138. I added this back to my swing trading portfolio, so I added shares back at around 113.5, and we're going to be looking to put that options trade on with our members. Great looking chart, and I do think we have continuation there. So that's it for me. Sorry to take so much time. Back over to you, Todd.
No. I set you back a couple minutes in the beginning. No worries at all. Great work. That Apple trade or that Apple chart is pretty impressive. I think there's 2 things behind that. I think they're upping their iPhone production capacity by 30%. I think their Fitness Plus app has been received pretty well. And another thing we talked about on CNBC yesterday is Peloton. I thought Peloton reacted quite well to Apple's announcement. So fitness space in general is doing well. As Gianni, our friend there, is saying, if you're not in the best physical shape of your life, you're missing out. Yeah, that's for sure. So guys, let's send it to break. We'll be back on the other side of the break with Terry Sector Focus, figure out how these sectors are spinning. Back in a sec, guys.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to tradinganalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing. tricks. So it's been my mission to run an above board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on trading analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life seven-figure portfolio with our members who prefer the longer-term investment timeframes, with some medium-term trading and option strategies mixed in as well. So head on over to tradinganalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
Hello, traders. I'm Terry Long with your weekly sector focus. Let's start with the weekly performance of the index and sectors. Now, both the S&P and the NASDAQ pushed to new all-time highs early last week. However, both did fall sharply on Wednesday, setting up just a modest correction here. Overall, the S&P was down about 1% last week and the NASDAQ down 1.2%. Last week, the XLE was the only sector that was higher, closing about 1.2%. Real estate and financials were the biggest losers, down 2.8 and 1.8% respectively. I want you to note communications sector over here last week was essentially unchanged, showing resilience against the benchmark's 1% decline. Now, on Monday, we saw the NASDAQ close higher, but the S&P closed lower. So could this be another hint of tech attempting to regain a leading status? And then Tuesday, I see an acceleration here in the NASDAQ. We did get both S&P and NASDAQ higher yesterday. But technology, again, looks to be out front. Here is this week's performance. This is Monday and Tuesday's price action now here. So we've got technology out front, followed by discretionary, utilities, and then real estate capturing a little bit of a bounce from last week's decline. All of these running ahead of the S&P so far for Monday and Tuesday's price action. Now, on the downside here, the energy sector fell 3.5% on Monday, only to rebound a little bit on Tuesday, but still so far netting a 1.5% loss to the beginning of this week. Let's switch over to our weekly rotation here. And you can see from here, the energy sector does continue to push higher with its northeasterly heading into this improving quadrant. So the opportunity for stocks in this sector to further their gains over the next few weeks does seem likely. However, that Monday and Tuesday price action in the XLE may be an early indication that we're going to start to see slowing momentum in this sector. Our leading sectors remain industrials, materials, discretionary, communications, and technology. In terms of relative strength is how I have these sorted here. Now, while industrials is our leader, look here, it has been showing momentum decay for the past several weeks. You can see this vertical decline here. So this is indicative of momentum decay or sideways price action mostly in this particular index. But new entries now, we have new entries here into the leading quadrant is financials and communications. So they are moving in, and we've been tracking their performance here for a few weeks. Technology. While technology is down here in this weakening quadrant, note that it's actually, the vector is turned north slightly here. So it is showing some signs of increasing momentum, though I'm still holding out for a completion of that hook. I want a little bit more northerly formation, maybe with Apple's 5% jump yesterday. That's a hint of a beginning of return back to large cap tech. Consumer discretionary does continue to decline. It started to move horizontally a little bit, but it's still also not giving us that clue when that turn. I still want to see a little bit more northerly exposure here. The materials is pushing down. Materials was in the lead, but momentum has really slowed down in this decline. These line segments are very short here in materials. I'm going to focus more on the materials sector in a moment. Over here in the improving quadrant, though, we have utilities, staples, and real estate. Staples and real estate now, from this last week, you can see the rotation. They've now actually moved down here into the lagging quadrant. And utilities is continuing its decay. So utilities had its big run up, and now utilities is pushing much lower. Healthcare is just kind of meandering around here. It's not aggressively showing any directional turn, a little bit to the downside, and I find that quite odd here personally with the COVID and all the advances that we've had in medical science to help us through this pandemic. I find it quite odd that we're not seeing a bigger push out of these guys right now. But I like what I'm seeing in financials and communications, and we're keeping an eye on it. So we actually now have 6 of the sectors in the leading position, running ahead of the S&P. So let's take a real quick look here at the IVE, IVW growth and value rotations here on the daily. This is our daily rotation. Actually, the last turn here on that daily, I'm seeing growth kind of reverse back to the left and seeing value come back up. And on our weekly rotation, we've been watching these two narrow. Okay, so the timing of the rotation is important here. But this is Monday and Tuesday. There's 6 bars. Sorry, 5 bars. There's 1 week's worth of performance here on the daily, matches up to 1 week here on the left. I'm going to switch over here, and we're going to focus this week on the materials and gold miners. So the materials sector is declining further, as I showed here. This materials sector is declining further into the weakening quadrant, but we note that a couple of stocks such as Freeport, Nucor, Lyondell, and DuPont. Where's DuPont? There it is, DuPont. These guys are actually pushing higher, and they're following through from recent hooks, right? So there's DuPont had its hook turned back here around the 20th. Now I saw Nucor bounce, although I'm seeing a little rotation back down, and the very last tick there is an incompleted week. So that's just Monday and Tuesday's price action on that last tick. So I won't take that as a full indication, but I'm seeing a reacceleration in several of these guys. Now, the other leading stocks in this sector, such as Celanese, Ball, PPG, Martin Marietta Materials, International Paper, and Cortiva, they've all started or continuing a big momentum decline. So most of these stocks are in a sideways price consolidation. Now, the other thing about this particular materials sector, as I continue to reiterate, I don't see a lot of viable replacements for stocks. So if we start to see a lot of these stocks leave the leading quadrant, there's only a couple of stocks positioned to attempt to move back into this lead. And if these leaders continue to decline, I think we'll likely see the XLB start to drop out of a leading role. Now, the gold miners are included here, so let's go ahead and take a look at that. Bennett did a great analysis on gold for you. Please go back and watch that again. I think gold is setting up for another run. What I'm starting to see here so far, is a few of these stocks in this gold miners group have actually formed hooks. We got New Gold here, which is the top performer in the gold mining, along with Eldorado Gold, Coeur Mining, and this one from South America here, also Hecla Mining. So a few of these may be beginning to hint, and there's even some over here in the lagging quadrant that are starting this northerly turn. But as a bulk, the majority of these gold miners are still underperforming, and they're waiting on that turn in gold. If we see gold start to rally, I think you're going to start to see some opportunity to pick up some of these gold miner stocks again for another continuation of that rally. All right. So I'm going to leave it there, Todd, and hand it back to you. Thanks, guys.
Yeah, that's good work. Before you flip the screen over, let me see. It can you throw back up? Is it possible? Sorry, Bennett, call an audible here. Show the weekly sector spider location. Can we do that?
Yep, Terry, you are back with us.
For me,
This
Terry,
is what you
like
want,
that.
Todd.
Yeah, like that's perfect for a bull market. Like I consider the risk on sectors that you want to see doing well: financials, communications, materials, technology, discretion, and industrials. Those are the sectors that you want to see bid up. And it kind of goes to the point that I'm making earlier, which is we're seeing more widespread participation, not just in tech, not just in communications. On the left side, you're seeing real estate, healthcare, which I've seen. Terry makes a good point. I've seen healthcare over the last couple of years trade more as a defensive, and I think it's considered more of a defensive, despite what you may think what's going on is they're, serving up the treatments that are going to save our society. But staples, utilities, healthcare, and real estate, those are your defensive. Financials, comms, tech, discretion, materials, and industrials. That's the recipe for a strong market there. And then
Exactly.
Terry's. Oh, go ahead. Sorry, I'll let you jump in.
No. I'm just agreeing 100% with what you're saying there. That's an excellent observation, and matter of fact, I'm surprised I skipped over that talking point.
And for me, Terry, it was like financials making such a strong move over to the right. I mean, we'd like to see more of a northeasterly 45-degree heading, but that's a strong move in financials. So now everybody's participating. That's pretty impressive. And then the other thing is you chose materials and gold miners. Gold is pulled back. I have some GLD in my portfolio. I'm holding it, but then you look over at the bond market, bonds moving down, yields moving up, miners coming on, materials acting well. Like, are we finally going to see some signs of inflation? Are we really seeing a reflation of this economy? And like I say that with like so much hesitation, because I've been listening to this argument for 10 years that, massively inflationary, hugely inflationary. I've been listening to that. We haven't seen sustained 2% PCE deflator levels in, I don't know, since I can remember. Maybe markets, rates moving up, bonds down, miners coming out. We'll see. I don't know. I'll believe it when I see it. How about that?
Yeah, the last I saw, I think the inflation rate, core inflation, was 1.6%. So I mean,
exactly.
I hear you. The QE. There's a lot of money been pumped into the system. Whether or not it's actually gotten to the point where it's going to start to drive inflation. So I always say, be careful what you ask for. You may get it, but certainly right now, things are looking very positive for the market with the correct sectors in this leading position. Let me address, if I can, financials real quick. Sure. I know market just opened, so we're running short on time here. But you did talk about financials, and we've seen this continued sideways push here, and in relative rotation, when we're moving horizontally to the right, that's a continued steady growth of relative strength performance against the benchmark. The XLF is continuing to gain ground against the overall rest of the S&P. And I think I've in recent weeks, I've started to see many of these financial stocks actually, now we've got a quite large group. This is the top 20 by market caps, not the entire XLF, but a lot of these large cap financials have now pushed over into leadership position. And this certainly was not the case just even back in October, or early November, right? Early November, Schwab was about the only thing we were talking about. And now look what's happened here just in the last several weeks. So, yeah.
I'm sorry. Yep. No, yep. Very, very good point. I'm laughing at Craig's comment. You don't give Alex enough time. Craig, obviously you missed the beginning of the webinar. Everybody loves Alex. Guys, you get the feeling they don't even care what we say and that all they want to hear is Alex.
That's a great segue into
We're going to
this.
give Alex a lot of time.
Let me throw two stocks and then we'll segue out if you don't mind. Two I'm looking at. And then we'll tell you, Craig, how to get more Alex. Alex, we miss you. It's just, people, the 10 minutes we gave you, people got mad at us for only 10 minutes. So Craig's got his own show. We'll talk about that in a minute. Two stocks. We've been doing, I've been doing AMD a lot on Trading Nation. This is a show I do on CNBC that's sponsored by Charles Schwab. So some really cool news. I've been doing this show, I swear for 5 years now. Where I actually trade a live account on Charles Schwab and put some real trades on. I've been doing, maybe you've seen, it's called Trading Nation. So some good news, and let me just share my screen. What monitor am I going to share? Number 3, I believe. Bennett, which it's I feel like Alex, I'm not sure which screen I'm sharing here.
Yeah, we've got AMD.
AMD, perfect.
Yeah, motivate.
So what's going on is being that Schwab acquired TD Ameritrade, I'm gonna relaunch this program working with the CNBC producers. I'm gonna be doing it on the Thinkorswim platform now, which is awesome, because that's where we trade most of the time on TOS. So I'm gonna build out a portfolio in real time and sort of adjust it in 2021, and that's going to coincide with the launch of the RAA with that. So I'm going to build a portfolio, whether it's I don't know how much money I'm going to allocate towards it, but I'm going to build and maintain a portfolio. So it's really exciting. We're going to launch that in 2021. Maybe you've seen it. Like, again, I think I'm one of the only guys on CNBC that trades live money on CNBC, so it's kind of fun. So look out for that. AMD's one. We called for AMD into 100. We've been tracking AMD since the 30s. I have it from the 30s. Beautiful wave count here. Looks like we have a 5-wave move, 3, 4, completed after just little ABC zigzag here, and it looks like upside fib projections into the 120 area. And AMD semis continue to act well. Bennett showed you SMH in the beginning, so that's the daily. I hear my daughter coming in behind me. So this is down to the half-day chart. We're going to be putting some more option trades on the upside. AMD will be part of my portfolio for the RAA, and we'll manage accordingly. So watch AMD, and then another one that I'm looking at and been talking to the team is Roku. Continues to act really well. This is a 30-minute chart on Roku. Simple 5-wave move, 1, 2, 3. Thinking we're in some kind of 4th wave triangle that might exist for another couple days before Roku eventually moves higher. So, there's a lot of stocks that have worked that'll continue to work, and there's good setup. So we'll leave it there. Bennett, what's also, guys, don't forget to hit the thumbs up button if you don't mind. Let the Google algorithm know that you like the work we're doing here. Right below that little thumbs up here. Nobody hit the thumbs down. Hit the thumbs up. I don't know. You hit the thumbs down, just do me a favor, throw a comment down and tell us why. The thumbs down comment challenge. Bennett, what are some announcements we need to make regarding Alex's crypto and other important matters?
Yeah, it's going to be taking place every Thursday, 9 a.m. Eastern. You can go to youtube.com/trading analysis if you're interested in checking out the show. It was a fantastic first show last week. He'll be back with you guys tomorrow morning. So check it out. Hope to see you guys over there.
Sounds good. So viewers, thanks again for spending your time with us. Hopefully you picked up a thing or two, get you through the rest of the week. Check out Alex tomorrow, 9 a.m. Again, hopefully it was a good 2020 for you. Looking forward to 2021. I feel like we're all smarter, more able to adapt to circumstances. We're all obviously better with technology, and that's the path we're on going forward in light of everything that's happened this crazy year. Everyone in the Northeast, get ready to dig out from this storm, and guys, have a great rest of the week. Alex, tomorrow morning we'll see you. Terry, Bennett, great work. And viewers, again, thumbs up. Thanks for joining us. We'll see you guys next week. If not, at tradinganalysis.com. sooner. We're starting the member webinar in 20 minutes at Trading Analysis. See you members soon.
Take care.
Bye.